All the major averages kicking off this holiday shortened week firmly in the red, though I will say off the lows of the session. More pain to be had from here, given the fact that there is so much uncertainty and volatility out there. How do you see it?
Hey, Morgan, good to be with you. So I'll start off with the good news. It's been very, very difficult over time to take the other side of some of the things that keep us overweight stocks, right? You have very accommodative financial conditions, a very healthy labor market, and you can make the case that the U.S. consumer has never looked better and is unlevered. However, that has not helped this year. I mean, that and a Metro card will get you on the New York City subway, right? So what we're talking to clients about more is portfolio resilience and durability. So how do you do that? Well, first off, we've reduced our overweight to stocks by about 60%, Morgan, from the beginning of the year. We've also diversified into other parts of the world. So if you think about a Canadian stock market, it's down 2%. If you think about a European stock market, it's down half of what some of the U.S. markets are down. So you can build portfolio resilience that way. And even in credit, and credit is a place that we've liked forever. Credit is a place that we've taken down as well, as we're staring at these two uncertainties. First on Russia-Ukraine, Morgan, it's like deja vu all over again, almost to the day 8 years ago, we were talking about Russia and Ukraine, okay? And back then, on the day of the invasion, the market bottomed. A month after that, you know, the market rallied by about 5 or 6% as we saw that play out. Now, Morgan, I don't want to say that that's going to happen necessarily. However, that was a prior playbook. But I think the bigger issue with investors right now is the Fed. It's not Russia-Ukraine. Otherwise, NASDAQ wouldn't be underperforming the way it has. And the thing I'll say there is, you know, I think this particular Fed wants to establish credibility around inflation, but no Fed wants to push us into a recession. So the whole question is, are we past peak hawkishness or not? Unfortunately, the only CPI number that we have this year is January. And it's easy to make the case about inflation now, but it's very, very difficult for the Fed, we think, to be able to walk through this without optionality. So the fact that they have every single meeting priced right now is where they should be. The question is, will they be able to play that out? And if they don't play that out, or if they do less, I think that could be a really nice runway for taking risk in coming quarters.